It's an urgent warning. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, a U.S. dollar collapse is imminent, and I have all the proof you need because the markets are going to react in a big way as investors look to dump the dollar to protect not only their purchasing power, but their net worth. The question is, where should you put your money before it becomes worthless? Well, we're going to show you because this is a Sunday show, the show that makes you money. We like to look at the technicals, momentum, and machine positioning across the broad U.S. equity, bond, commodity, and currency markets to help you make more money trading and investing. Now, let's head over to the Wall Street Journal where we picked today's story up with a headline as the dollar is nearing its weakest level since the Fed started hiking rates. And this is important because even though we note that central banks don't have control over their currency, when you see them cutting rates, investors believe that they do have power over the currency and they start to dump it, short it, and drive it lower. And now we're seeing the beginning of a massive collapse in the U.S. dollar. The value of the U.S. dollar slid on Friday near its lowest level in more than 2 years. And we're going to show you later in the show why this is going to get significantly worse after Fed Chair Jerome Powell all but ended the central bank's inflation fight. The greenback's value against a basket of currencies has now hit a 52-week low as the change in policy now promises to reroute the flow of capital across global markets. Because remember, due to the interest rate differential between what the Fed was paying and what other central banks were paying, caused money to flow into the U.S. Now, under the expectation, the Fed is going to start aggressively cutting rates. Money's going to start flowing out. It's going to lead to a significant decline in the dollar, which means it's time to look at repositioning your dollar assets to help them keep their value, which is going to create opportunities in the markets. But let's talk about machine positioning here. Let's over to Goldman where we get their latest tactical flow of funds report. This from Scott Rubner, because he notes there's a very positive 4-week equity trading window until September 16th. He's saying this is a no rules market. What he's indicating is he believes it can go up. And when the dollar goes down in value, investors again look to protect their money and they're going to head to the U.S. equity market in a big way. The pain trade for equities is higher as he notes as the global 2-week vacation started on Friday at 4. The bar is being bearish at the beach and the Labor Day barbecue party, he says, is high. This is different than we've seen before. He says U.S. equities have acted like a bunch of rhinos as recession in name only since August 5th as money continues to pour into the market. And CTA releveraging, we'll look at that here in a bit, targeting vol and vol control strategies. Unwinding of puts and corporate demand will act as a tailwind as sellers, he says, are out of ammo, forcing fundamental investors in and drawing markets higher. And when we look at machine positioning, if you're not familiar with what the CTAs are, these are machines that trade based on price level or momentum in the markets. So as markets go higher, they put more and more money in. Well, during the last sell-off, due to, of course, the collapse and what we saw was a carry trade with the yen, a lot of the machines, as we warned our subscribers, actually sold off. Now they're looking to re-leverage and come back in. And what he notes is in a flat tape, meaning if stocks just go sideways, you're going to get $27.9 billion into U.S. equities alone. How about in an up tape? 27.3 just into U.S. equities. And look at that, 72 billion into global equities, and even in a down tape, their buyer is in every instance. And look at this over the next month. What do you see? A flat tape, 79 billion global equities. Up tape, 139 billion global equities are coming all back in, except if you see a down tape. But in the short term, looking over the next week, they are buyers here because we witnessed one of the largest and fastest unwinds that he's ever seen. And our, of course, reports warned our subscribers will show you how you can get a lead on where the markets are going, how you can adjust your portfolio. Whether you're a trader, whether you're a long-term investor, we're going to give you some tips here because look at this. When we talk about estimated global equity positioning, you see the machine sold off and then the market rallied back against what happened. Retail investors, they flooded into the market. Corporates came in and said, look, we want to buy even more of our stock back while it's on the dip. And now the machines are off sides. They've got to chase this market back up. And what Scott's suggesting is this is the tailwind now over the next 4 weeks to drive stocks higher. A weaker dollar is going to also flush money into the equity markets, something you need to take a look at. But as he notes, the heavy corporate buyback flow is in play and repurchase desk saw 1.9 times the 2023 demand last week, led by tech, consumer discretionary, and financials, something we've been flagging on our reports. But keep in mind, the blackout window starts on September 15th. Mark your calendars because 50% of the corporates will be in the blackout window. But to show you just how powerful this is, they're buying $6.62 billion worth of daily purchasing. In the past, we've seen somewhere right around $5 billion. So it just goes to show corporates are a major buyer in this market. They're going to drive the equity market up. And here you can see buyback authorization. Right now, we're sitting right at peak of what we've seen before back in 2022. Now let's talk about where the markets are headed here. Let's look at our own screens because we like to run momentum screens. We like to look at machine positioning, and we run our own reports on this to help you get a lead on where the markets are going. Again, it doesn't matter whether you're a trader or a long-term investor. We give you some fantastic tools. Let me show you what we're looking at here. Is the market, the momentum is to the upside. Now, one of the things we look at is a relative strength index. We want to see this above 40 to show positive momentum. It's sitting at 62. The MACD, or moving average convergence divergence, this has a nice positive cross. So you start to look at these technical signals. Now, maybe you struggle with these, and that's okay because a lot of people do. But one thing we have is a report called our Momentum Timer Pro. We aggregate signals like the RSI, the MACD, and other signals, but we add a proprietary overlay to smooth out the signals. And right now we have 9 consecutive daily buy signals. And look at this. We see across momentum over a 1, 3, and 6 month window. And then we saw that shift as we saw the market sell down and we saw momentum come back. Now we also look at machine positioning, but ours is very unique because we run a historical overlay. So we generally know where the machines are going before they actually know. And what that did is it triggered back on August 12th a buy based on our CTA Timer Pro. You see now it's max long. You see the machines need to chase it higher. We've got the lead on this. If you were a subscriber and you had pulled some money out of the markets during that sell-off, we told you when to get back in. You'd be up 5.23% right now. We also really believe strongly in stop loss levels. Here's our live stop loss levels. This is what our subscribers get. And here we have upside target right at the all-time high. Downside target has been revised higher. If you want to get on these reports, here's the best part. You can duplicate 100% of the trades we do, 100% of them. Can't do that with anyone else. And we give you a 30-day free trial. Links in the description below. Check them out. Now, let's take a look at the charts of SPY as we go through and look at the broad U.S. equity market because we saw this dip here. A lot of retail investors sold. And what happened? Again, retail came back in on the dip. Corporates came back in and drove stocks higher. We're right sitting near the all-time high. That's the next threshold for a breakout. Our downside target, we revised that up a little bit right here at this 536 level. That is near-term support if we do see a reversal. But as Scott Rubner of Goldman notes, he says the odds of that right now over the next 4 weeks is unlikely. You tail on the catalyst of a weaker dollar here. You see money likely flowing into U.S. equities over the next several weeks. Let's talk about the NASDAQ here as we look at the Invesco QQQ Trust. Momentum again positive. RSI, you want to see that again over 40? Got it at 58. MACD positive cross. Momentum Timer Pro flagging 9 consecutive daily buy signal. You want to buy tech stocks? We got it. Both of our reports on the same day on August 14th and nailed it. Up 3.56%. Scott's saying, look, there's going to be a lot of money flowing into tech stocks. This number's going higher. But how about that? We beat it. We saw the shift in momentum. We flagged this to our subscribers. We saw the shift in machine positioning. And here's the best part. Every day we look at what signals are generated. I tell you which ones I think you should do. I give you the stop loss levels. I give you everything, and I update the reports every day. We also once a week go through and update the stop loss levels. These are our live stop loss levels as of right now for our subscribers. Friday's closing at 480 upside target. Look at this, 488.80. Let's take a look at the chart here of QQQ. Because what do we see? That nice upside target, 488. That's just a bit above where it is right now. And once it breaks through that, it's got a little bit of volume here to find some sellers. Highly unlikely that's going to slow this thing down. What we're looking at here is a run now back to the all-time highs as well. Downside target just below. Again, too much of a demand for flows here to really slow down the U.S. equity trade. Again, you pair this, as I said, with a weaker dollar. What happens when the dollar weakens? People are sitting on cash. They want out. They want somewhere that's going up right now. There's only one busting down that's leaving the station in a big way. Well, that's the equity market. But there's another one people are missing out on. We'll talk about that in a moment. Let's shift over to small caps. What do we see here? On August 19th, our CTA Timer Pro, we saw the machine positioning get short. It flagged to our clients. You'd be up 3.48%. You make money with our reports. That's the best part. Free 30-day trial. Here's our live stop loss level. Everything is running on this way you want to see it. Positive momentum on the RSI, the MACD, even Momentum Timer Pro has got that nailed. Let's take a look at IWM here and see what's going on with the positioning. Because what we can note is that it came down here, it tagged the 200-day moving average. That was at the bottom there, and next thing you know, a flood of money came in, broke through this. See this red line? This is a 6-month volume profile. This is where most of the shares were traded over the last 6 months. Broke right through the selling demand, and now you're looking at a return to this upper end of this volume here as we look to on the side. Potentially, if it gets through that over the next 4 weeks, we got to zoom out now to the 5-year chart. You're talking a run right back up here to 232. This is an amazing trade, just like our other two, giving our subscribers and you the potential lead on this. But we talked about bank stocks here. Let's take a look, because Rubner mentioned money's flowing there as well. And why would that be happening? Well, keep in mind, many people believe that rate cuts are bullish for banks. In the beginning, they are, but not over the long term. Usually it tightens financial conditions, but investors believe otherwise. Let's take a look, because they think that means the banks are going to lend more and make more, but that's just not the case. Momentum positive on this. Look at this. We nailed the call August 19th. We told our CTA Timer Pro subscribers, this is one you want to do. We gave them the stop loss level to be up 4.31%. That's in a week. Can you believe that? How do we have? Again, momentum positive. RSI at 65. MACD's got that positive cross. Picked up 2 consecutive daily buy signals on Momentum Timer Pro, but we nailed the reversal in machine positioning. That is phenomenal. Let's take a look here at KBE and see what's going on, because you have this thing, it just rocketed up. It held support. It got off this 50-day moving average right here, held that, held the support here, and then took off. As we zoom in, look at the 10-day volume profile. Bingo. You see buyers coming in and stepping up. It closed over that. That's what you want to see. How about the 30-day? This is what we tell our subscribers. We said, look, we're closing right at that 30-day volume profile. You got to get in this. The rocket ship's taping off. You're going to make a little bit of money. And sure enough, they did. This is phenomenal. And that's why we give them increased levels and stop losses every week, because we like to make money and keep a hold of it. Let's talk about emerging markets. This one, we saw the reversal as well. Again, our machine positioning nailed this one, 814. We flagged it up 2.89%. You can do all these trades. That's the best part. Every trade. And I know you've probably signed up for reports before. You couldn't copy them. Ours, you can copy exactly. We tell you when to buy before markets, give you the stop loss levels. Everything we're showing here perfectly duplicatable, because momentum shifted on emerging markets. Makes sense, money flowing back out of the U.S. over to foreign markets. That would be a catalyst, again, of a weaker dollar. You see here, RSI at 60. MACD's got that positive cross. Momentum Timer Pro coming off a minimum size sell signal here on the 1-month chart, picking up a shift in momentum. The CTA Timer Pro came off a short position. We nailed that call. Again, live stop loss levels there for our subscribers. Let's take a look at EEM here and see what we've got going on, because it came way down into some dangerous turf here, and that held right around, not close, but right near its 2-year volume profile, and then money just rocketed in. This thing is just taking off. It's going vertical, as we've heard before. And look at that, it's just rocketing up. You break through this purple line here right at around 47 or 43. Let's see, let's zoom in, 43.96. You break that, you've got some upside potential to 46 here. There just isn't a lot of slowdown. Again, everybody's going to be flooding out of the dollar looking for opportunities in one place. While they're focused on the equity market, they ought to be looking at the bond market as well. We've heard this from Bank of America. Michael Hartnett says, look, you got to be buying the long bond here, because the Fed cuts rates, the long bond is going to go up. Let's take a look here, because momentum is positive. RSI 61, MACD's got a positive cross. These are all the things we want to see. How about this? Momentum Timer Pro, 21 consecutive daily buy signals. Momentum on the 1, 3, 6 months, it's nearly at max levels. Now remember, this was one trade we did without a stop loss. People said I'd get obliterated on this. Now we don't suggest you do that. But if you do, just use the reports to dollar cost average back in. Right now, that trades up 4.67%, excluding dividends. Our cost basis at 94, closing now 97.44. Upside target 100.57 and looking to go higher here. Let's take a look at TLT and see just how far it can go, because you see this is a massive bottoming pattern right in here. There's that 157 where those green lines are at. Let's zoom into the 1-year chart. In fact, let's zoom back out to 2-year, and here you see sellers have been right where these 2 dotted green lines are. You see them come. It came up here once, sold down, popped up, sold. Maybe the third time. When it breaks that, look for this thing to shoot all the way up here into that 108 zone, creating what will be a tremendous opportunity to long bond. And what's the catalyst, of course, is the Fed's going to cut rates. That is it. And the market believes the Fed's going to cut more than the Fed thinks. That's why you're seeing money flow here into the long bond. Let's take a look at gold, because everybody's bullish on gold, but where does it go when it's at its all-time high? So what we do from a trading perspective, we like to show you opportunities. You want to buy at the all-time highs and chase things higher. That's your business. We like to find things that are low and creating a shift and change. What do we have here? 12 consecutive daily buy signals, maxed out on the machine positioning. We've got no position on this trade. Where does it go from here? Well, you've got me. I'll let you weigh in the comments. Where do you think gold goes? How much higher? Because right now we can zoom out and we're sitting pretty much right at all-time highs. Where does this go? Again, we don't know. But one thing that is going to follow gold if it continues up is gold miners. And let's take a look at this, because again, positioning here, max long on our CTA. Momentum has shifted to the buy side. We don't have a position on this one, but there's a potential this could go higher. It almost hit our upside target of 39.95, came very close. You see the close, 39.34. But this thing has the potential to go higher here, because remember, usually where gold goes, the miners have follow. In this case, they haven't kept pace at all. You notice the miners aren't sitting at their all-time highs or anywhere close. Just zoom in a little bit here, because what you see is it came down and broke through the support level, pulled back, held support, rallied up. We said if it pulls back and gets near support level, watch out, this will reverse. Sure enough, it did that. We'll zoom back out, 5-year chart, your next move just above here, and then you're looking at the next stage right in the mid $41 range for your upside target here. If gold continues to rally, look for the miners to follow, but watch out. If gold reverses, well, the miners are going to come plummeting down. Let's talk about the dollar here. We're looking at the US dollar bullish ETF symbol UUP. Momentum being negative on this. RSI is at 30, so it's below the critical level of 40. MACD's got a negative cross. 16 consecutive daily sell signals on Momentum Timer Pro. So we told you ahead of time the dollar was getting weaker. Look at the machine position. This thing is max short across the board. We have max short on the 1-month window. This thing's looking terrible. Now, at some point, opportunity is going to knock in the dollar. There's going to be a reversal, but not in the immediate point here. So keep in mind, one of the nice things is when there is a reversal, we'll be the first to know it. But let's talk about the chart here for the dollar, because this thing is headed lower. Let's flip the screen over so you can see what we're looking at as we now turn to UUP, and that is somewhere down here on my program, and there it is. You can see there's a 6-month volume profile. So what happened is you see this beautiful topping pattern kick in here and broke through support. Next thing you know, everybody wants out of the dollar. Stop losses are getting triggered, and we zoom out to this 2-year window. What do you see? All the buyers right at this level. What's happening is breaking through there, setting up a move down here to 27.58. If it doesn't hold support somewhere in there, watch out. This thing's going to head and break through its 2-year low. Let's zoom out to the 5-year chart, because you're threatening now to get way down here to the under the $27 price point. You know what looks like a huge topping pattern of the dollar, validated again by the fact that the market thinks the Fed's going to cut in a huge way. But let's see. Let's talk about opportunities, because there is one that we see coming at some point. We don't know when, but we know our signals are going to tell us. That is in soybeans. Because momentum right now is negative. The RSI is at 38. MACD's got a positive cross. So we're looking at potential short-term bottom here. But look at this. This is something you don't see. Max short across the board. Max sell on the 1 and 3 month. And the 6-month signal getting its way there. Let's talk about soybeans, because at some point, again, there's opportunity. It's too soon for the beans, but at some point they'll flag and we will be on top of that. You want to talk about a topping pattern? Here you can see this one right here. You see the support right at this level, right around where this purple line's at. It broke through support. This indicates people are dumping soybeans. They said, hey, we want it out. The market said we want in, and now we're at this critical level here. And you notice this is support because why? Buyers were here once, buyers were here twice, but if this breaks, you're now looking at a move down here to right at 19. You say, wait a minute, I don't see any buying support. That's the problem is we got to zoom out to the weekly. As we go out to the weekly chart, you find out there is the next level of support right at 19 on SOYB. When that transition hits, we will be the first to know, but this looks at a huge topping pattern. If this breaks down, you want to talk about opportunities in the market. It's the things that are low and looking to reverse. Of course, that's what our reports are designed to do. We don't want to show you how to buy things at the all-time high and chase them higher. We show you how to buy low, establish your risk levels, and then look to make money. Again, links in the description below for your 30-day free trials. But right now, the weakening US dollar is about to send the markets in a direction that most people are bearish on. They're going to look at the economic data and say this thing should be going down. Next thing you know, markets are going to go up and people are going to play chase. You can beat them to it. But with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.